Welcome to our channel. If your business suffered a loss and you want to leverage it for tax benefits, follow these step-by-step instructions to use net operating losses strategically. Step 1. Understand that a net operating loss occurs when your business deductions exceed your gross income for the year, creating a negative taxable income. Step 2. Calculate your NOL by completing your tax return normally and determining your taxable income or loss, making specific adjustments required by NOL rules. Step 3. Know the current rules for NOLs. Under the Tax Cuts and Jobs Act, NOLs arising after 2017 can only be carried forward, not back, and are limited to 80% of taxable income in carry-forward years. Step 4. Carry your NOL forward indefinitely until fully utilized. Unlike previous law, post-2017 NOLs never expire. Step 5. Apply your NOL carry forward to offset up to 80% of taxable income in future profitable years, reducing your tax liability substantially. Step 6. Track your NOL carry forward amount carefully using Schedule C, Schedule F, or your business tax return, and maintain records showing the original loss year and remaining unused amount. Step 7. Consider if your business structure optimizes NOL benefits. Pass-through entities like S-Corp and partnerships pass NOLs to owners, while C-Corp carry losses at the corporate level. Step 8. Plan strategically with NOLs by timing income recognition or accelerating income in years when you have NOL carry-forwards to use, maximizing the benefit. Consult a tax professional for complex NOL situations. Don't forget to like this video and subscribe to our channel.